Welcome to TiElogues, and today we are in conversation with Manu Rikhye, who's the partner at Merak and GrowX Ventures Fund. Welcome, Manu, and I'll dive straight into a key question that all the startup founders want the answer to. Tell us, what are the milestones that a startup should have achieved before the founder goes out looking for funding?
Uh, Thank you, Bushra, for having me here today. I think this is a great initiative that TIE is doing. With regards to your question, I think for any founder, before they start spending serious time, effort, energy, resources into business, I think it's very important to intimately understand the problem that they're looking to solve, right? Spend a lot of time understanding, evaluating, discovering the problem. Um, and once you've figured that out very well and are able to succinctly articulate it, um, you will find that the solutions that you're starting to imagine will start to become clear in your mind. So I think the first thing is just understand the problem and be able to succinctly communicate that. The second in my mind is just the path to solving that problem, figuring out what kind of solutions, what kind of resources, what kind of effort, energy, people would it require to be able to solve this problem. And a part of that solution also then translates into coming up with good financial models, high level unit economic models, thinking through some key business metric that will be uh, required, and the business is likely to achieve in medium and long term, besides just the next 12-month journey. I think the third thing that one needs to do is a final check on both these things is the market large enough, right? So you may have identified a really good problem and you may have a path of building a robust solution. At that point in time, taking a pause and seeing, how large is this market? Is it a few customers? Is it tens of customers? Is it hundreds, thousands, etc.? And I think the answer sometimes is very unique to the business and industry you're operating in. For example, in a B2B business, even if you can get a few hundred customers, especially enterprise customers, you have a very large viable business. But if you're building a B2C customer business, you need millions of customers. So if you intimately understand the problem and you've understood how you're going to solve the problem, the answer to the third will start to emerge. And once you define who your customer is going to be, that'll start to create a lot of clarity for you in overall business building. One other thing I'd like to advise founders is that not every business needs VC funding, right? So sometimes you could be onto something which is very interesting, very valuable, very large. That just needs to be built on a self-sustaining basis, right? Bootstrap your business, start your business, get some traction, validate some of these ideas, and then ask yourself, does this business even require VC funding, right? Does this even require external capital? Can you just raise the little bit of capital that you need initially from friends, family, people that you know and trust? Because that's a much shorter cycle. Raising from VCs is a much longer cycle, also distracts you from raising money, building the business. So when you start to raise money, your business starts to take a little bit of beating. So be aware of those trade-offs and time these conversations accordingly.
Okay. Much has been spoken about winter funding and this being a little somber year. But tell us, what are still some hot sectors? Which are the sectors where the investors and VCs are still keenly, looking at? What are the sectors which are attracting these funds?
So I think this term winter funding has been overused quite a lot. I
Overused.
think the reality is that there will be more focus on fundamentals and less capital is going to get invested into early stage ecosystem. And I think this is going to continue till late next year, right? Most people are thinking that this is going to be over very soon. But I think this discipline of asking the right questions, and finding business models that work and are sustainable is going to be front and center for every investor. And because there are just too many opportunities that don't fit that framework today, because we weren't asking those questions as much 5 years ago maybe. As a result, what's happening now is that there are a lot of companies that don't fit that framework, and will not find funding, and that's just going to create more and more anxiety and a cycle of bad news for people. The reality is that all investors, including us, are always looking for good quality founders, good business ideas, and are always ready to write checks when we find these two intersections, right? These two intersecting. So sectorally, I think today you're seeing a lot of energy and excitement around climate tech. You're seeing a lot of interest in enterprise SaaS again, right? Because enterprise SaaS again as a business segment has more reliable cash flows, well-defined unit economic models, and India has also become very good breeding ground for SaaS companies. So I think you'd see a lot of action in that. Interestingly, you're also seeing a lot of action around health, right? So post COVID, one of the big wave that happened was focus on everybody's health. So I think I believe in the next 18 to 24 months, you'd start to see life sciences and health become front and center once again, right? So these are two or three big themes, but I think there are the evergreen themes, right? India, if you look at historically over the last 50 years, some of the iconic businesses have been built in financial services, right? Traditionally. And if you look at even the startup ecosystem space, you'll find some of the more successful businesses that have been built in fintech world, and I think that will continue, right?
Okay. Manu, tell us, how do you identify and evaluate promising startup opportunities? Give us a peek into the investor's point of view.
So how we evaluate is very different than, in some ways, not so different, and in some ways unique, because every VC first and foremost would look at the founding team, right? Interestingly, we don't have any framework for how we evaluate founding teams. Incidentally, from our first portfolio that we built in the GrowX Ventures fund, we have 3 husband-wife teams, right? Which is very unique. It's not like we went out and looked for husband-wife teams, and most funds would shy away from investing in a husband-wife team. And out of the 17 companies we invested in from the first fund, 3 have husband-wife teams. But I think we believe that these teams are very strong, very complementary. So what are we looking for? We're looking for exceptionally talented people in the founding team that have complementary skills that they bring to the table, right? And I think we found that, and we continue to search for it in every new investment we make. We're looking for, within the founding team, bold vision, ambition to solve really unique problems. So our stated thesis is that we are looking for investing in early stage businesses within B2B tech world, that folks that are looking to solve real world hard problems that matter. So, we get more excited about ideas that matter, and we're less interested in problems of luxury, so to speak, right? So if you look through our portfolio, that's what we've done. So that's on the founder and the kind of idea side. I think the other 2 or 3 things is what I talked about, right? We're very interested as a VC, right, in understanding the market opportunity. Is this going to be a large enough business? Because we often see businesses which are great businesses, great founding team, but don't necessarily need VC funding, right? Because they can slowly, sustainably be built and would be 100 crore top line business and generate a very great, solid net income, net profitability. But that doesn't necessarily need VC funding to expand and grow even more rapidly.
Okay, tell us, some advice for our startup founders who are setting up the business, growing, hiring people. What are some key mantras they should keep in mind while hiring as leaders, the kind of skills that they should incorporate to create these happy workplaces?
Right. We are a tech investor. Today, tech is in fashion. Everybody talks about how AI, chat GPT, generative AI, everything else is disrupting world and it's going to take jobs away. I don't know what the future holds, but as things stand today, we're still a people industry, right? We're investing in people that are building businesses, are hiring people to help them build their businesses, etc. So I think the people agenda has to be the front and center of every founder, right? The ability to hire the right talent, which also means you need to hone the ability to spot the right talent, right? Are you asking the right questions? How are you trading off between competence and attitude and behavior, right? That balance that you need to strike has to be discovered for each founder independently. Two, I think, how do you keep this talent engaged, right? How do you challenge it? Third, which I think I see very few founders doing, is conflict resolution, right? There is a lot of times there is intense pressure that the founder experiences from investors like us, or from the ecosystem, or from competition, and needs to grow. How are you able to filter that and motivate the team to drive the outcomes that you want? And while you're driving those messages and conflicting situations emerge within the businesses, how are you able to resolve that conflict amongst your team? How do you deliver a direct message yet not be disrespectful or hurtful towards people in your team?
Okay. Thanks so much, Manu. Thank you for your time. Thank you for sharing your thoughts with us. It was a pleasure speaking with you.
Thank you, Bushra. It was great chatting with you, and I hope our little chat can help founders and inspire them to go build some exciting businesses for the future of India.
Exactly. That's the idea. Thanks so much, Manu.